Hello everybody, this is Buddhismo Crypto. This is John, your host. And on today's episode, we'll be talking about some of the altcoins that we're in. Well, specifically AMP, one of our favorite coins at the moment for Crypto King and I. And also, I asked Crypto King a few questions about how do you get into investing if you don't have a lot of cash to throw around. So we'll discuss that and give you guys some tips on how to get into crypto at this moment. On another note, we're still doing a $1,000 giveaway, so please make sure you subscribe to the YouTube channel, comment, and like this video. Please make sure you also follow my Instagram page at buddhistmoodvideo209. Okay, now let's go to the video.
How much potential do you see in AMP? Do you think this is one of the ones that are going to stick around for a long time?
I would have to say so. Just like I referenced earlier, AMP is super similar to XRP. There's no reason that they both can't coexist. They're both doing similar things, but on different levels. Whereas AMP is working more so with merchants and vendors that are accepting crypto as payment. XRP is working on the bank side for the cross-border transactions. So I mean, they're both completely different, but completely similar in what they're trying to do, circulating supply, everything. Like if you scraped everything away from both of them, you would think it's the exact same thing.
I'm still on Polymath, on EOS. How do you feel about those coins?
They're going to eventually recover. Is it going to be in a week? Probably not. Maybe about March, April this year, I would have to say you'll be solidly in the green and probably out of those coins. Like I said, we'll just watch them. If one moves sooner, faster, more volatile than others, you know, we take that profit out and put it in one that's lagging behind, one that isn't performing as well.
We're still scaling into more trades.
Right.
If it goes a little lower, that's when you don't want to go in all the way right away. Yeah. Like I said, about 10,000, but I bought 2,500 first. And then about 7,500 after that. And I got a better price too. Warren Buffett says when there's red on the streets, that's when you want to get greedy.
You want to start buying.
So, let's take for example, I'm into Ren right now.
Yep.
That was one of your recommendations. It's down 75%. Why did you pick Ren?
Ren, just because it's not a poop coin. So just like with AMP, they're actually trying to solve world problems. They're actually doing something about it. Basically, the team is actually active. Yeah. So they're not in an early phase of their development. Ren is always good. Ren always moves. Ren is always volatile. So it's always good to scrape some money in and out of it. You hang on to coins a little bit longer because you don't want to miss the big movements. You know, I'll be out of a coin and you're still telling me, oh, I kept some of it, I did this, I did that. But Ren is good, especially for a long-term hold. Being down as much as it is, you'll definitely want to buy a little bit more, scale in, lower your average price down.
And what $1,000 is down to $250. 75% dip.
Yep.
And you want to buy some more. Which, you know, takes me to my next thing. What's the proper trading strategy depending on the situation? Let's say there's a family man. Most of this money's tied up, right?
Yeah.
You know, has children, a wife, bills to pay. Like, how would a person like that start getting into crypto?
So you're saying if he makes all the money for the family?
Yeah, that's the only bread earner. There's nothing else. You know, the wife, she's a homemaker, takes care of the kids. There's not much room to make extra money because taking care of kids is already a full-time job.
You know, definitely you would need to be a little bit more frugal with your money. Or you going out and eating out all the time, buying these expensive coffees, things like that. You would definitely want to get your budget in order first. And then depending on your age, say they're our age, you know, late 20s, early 30s, this is the time to take risks. You just have to fully look at your budget, look at how much are you contributing to your 401k, something like that for people around our age. I just recommend them contribute as much as they get matched from their employer. So if their employer matches 5%, you go in 5%.
If you're still watching, please make sure you subscribe to this video, like, and comment down below.
Anything above that, invest it yourself. That's a big thing because a lot of people will contribute a lot more than what their employer matches. You know, if you would invest that in a little bit riskier asset class like cryptocurrency, even traditional stocks would be better than just contributing it to your 401k. In the long run, that's going to pay off 100x.
I'm thinking if you want to be like super conservative, like super safe, you gotta start with the Roth IRA. But like you said, people at our age, if you want to make money, if you want to have a big reward,
exactly,
you gotta take a bigger risk.
Yeah,
that's what I'm doing here.
To get back to the question, first of all, you would want to look at your budget and actually do your budget. Then you would be able to figure out how much money a month you could put into crypto. And then from there, I would say once a week. So if that dollar amount is $200, you could take from your budget to invest. After all the bills are paid, kids are taken care of, food is on the table, mortgage is covered, you have $200 to invest every month. Then I would say once a week, pick one day. Pick Monday at 5 p.m. You're going to invest $50 into whatever the specific cryptos are that you're looking into. So then you would do that, and as time goes on, you would gradually build up. And from there, you could start learning how to day trade. You could start learning how to swing trade, because everything right now is really going to be a long-term investment. Especially just being able to put $50 once a week. Maybe it's even less. Maybe it's $20 once a week you could only put in.
That's how I started.
That's how it is for some people. You definitely are a long-term investor in the beginning, but you could also start to look into playing the swings. Like for the next 3 months, I'm just buying Bitcoin. And say your average price in Bitcoin is $35,000, and Bitcoin runs back up to all-time highs. Obviously, take some profit.
Because that's almost like doubling your money right
Exactly.
now.
Even if you only put $100 in
$200
and Bitcoin ran and went crazy, don't think that your $200 is going to go to $2,000. Bitcoin would have to go up 10x. So it's just having a plan is, okay, if this pumps to these certain levels of the Fibonacci, I'm going to take some profit. And then vice versa, when Bitcoin or whatever the crypto is pulls back like to these levels, that's when you're going to put your profit back in. You're still going to put the money you're allocating once a week to invest on the specific day on that week. But when you take your profit, you set a point when you're going to put that profit back in. So if you bought in at $35,000, your average price, you get out at $60,000. Okay, I'm not buying until it gets below even $35,000 this time. But you'll still have your weekly buys going in regardless of what happens. That's how you stay strict.
Like myself, when I started trading, I started with a regular stock market. And just by nature, I'll buy it cheaper and sell it when it goes higher. That's the best move. I would just look at the top movers. Okay, what companies are up the most and what companies are down the most.
And then you could look in a time frame, a day, a week.
Yes, exactly. So I would look at the whole time. Is it down or up? If it was up on the old time chart, if it was up like a percentage, and it was down on the monthly, I'll buy it. But that's how I did it. It's down, so I might as well buy this. Like whatever was down, that's what I bought. That strategy in an okay market, like at the time when I was doing it, it sounds like it was like a bull market. Yes, a bull market. So if you were just buying here and there, when the prices were down, every time I saw a dip, I didn't care how much it was. If the price was red, I'll buy a little bit more. Every time it was down, I'll buy a little bit more. That's the long-term investing. And it worked out. It works out.
Dollar cost averaging.
Dollar cost averaging, and it works out. But once you get to the point that you realize, okay, I could do a lot more. You know, that's when you want to be able to pull the trigger on buying $1,000 of crypto, $10,000 of crypto.
You gotta keep going.
And you gotta keep going. 100K. Crypto King right here. That's what he plays with. That's no game. Do you have anything else to add?
Thank you for watching this video. Please make sure you subscribe, like, and comment down below. There's some videos right here that you can go watch. They'll pop up right here. So yeah, hope you guys enjoyed this episode and have a good one.